What's going on, everybody? Welcome back to Catacombs. So today we're talking about the market, some money situations that's going on. For the last several months, people have been pissed off with the current administration as far as the stock market is concerned. There's been a hell of a lot of talk about the stock market and a lot of people who make hella bread losing money and whatnot. I'm not really worried about it. Yes, I'm invested in the stock market. Yes, I've made money. Yes, I've lost money. It's the name of the game. I think a lot of these people who are so pissed off with them are a lot of the people who that's all they do. They're not just passively investing or being a retail investor. There are people who are glued to screens all day, crunching numbers to try to figure out when to buy and sell and all of that jazz. And those are the people I think are the most upset. But I do want to read this article from NBC News about this. As you can see, the headline, stocks unleash remarkable comeback after a historic dive from Trump's tariffs announcement. Blah blah blah, whatever. The S&P 500 has notched its longest winning streak in 20 years after suffering from its worst ever downturns. Okay, this is by whoever this is, Rob Weil. I think I'm saying his name right, and this is on May 4th. This is about 6 days ago. All right, so this is fairly recent, but you know how things can go in the market. But anyway, let's go ahead and get started. In the week following President Donald Trump's Liberation Day tariffs announcement, it looked like the stock market had seen a ghost. Over the course of 7 days, following his April 2nd announcement, the S&P 500 lost more than 12%, a decline not typically seen outside of extreme events like the COVID-19 pandemic and the subprime mortgage crisis of 2008. Both once in a lifetime market crashes. I'm a millennial, so we're used to this type of thing. That stretch last month also saw the fifth worst 2-day percentage decline since World War II. Now, you see the framing here? They're mentioning all of these past big hits. Now, granted, if it's true, then it's true. Who cares? The people seem to forget that the market goes up and down. It happens. This is what happens. This is why I don't, if you have diamond hands or if you plan on holding for a long period of time, you really ain't worried about it. I mean, Warren Buffett I'm pretty sure he's seen his fair share of ups and downs. He's been doing this for like 80 years. I think he bought his first stock at 9 years old. So he knows what time it is. He knows what's going on. So I'm just over here playing with the screen. Where are we at? Okay, World War II. Okay. Government bond yields, too, began to creep steadily upward, making it more expensive for U.S. to borrow money amid signs that both the substance and erratic rollout of Trump's tariff plan were testing traders' faith in the United States' ability to make timely payments on its debt. I'm still trying to figure out, as a person who's kind of got into this type of thing rather late in the game, mid to late 20s, and still haven't really researched all the history of the stock market. I'm trying to figure out how in the hell the U.S. is in debt. Like, who are you in debt to? Maybe that's the reason why they don't want the Fed to be, the Fed, which is not a federal. It's a private company. It's not government at all. We're in debt to the Fed. How the hell did that happen? Apparently something went down in the 1930s, but I'm going to go ahead and that's beyond the scope of this particular video. I'm going to go ahead and get to this, finish up this article. But we got a lot of stuff going on. Debt and all. Stocks around the world sold off too. Okay. April was an absolutely seismic month in financial markets, which I would agree. A lot of people were talking about it, as the announcement of the U.S. reciprocal tariffs led to a huge global sell-off. An analysis with Deutsche Bank said in a note to clients today, the initial moves were truly historic in their speed. And yes, it will be considered historic for governments. For a government, usually corporations, especially the startups, they move pretty quick. You get used to making moves like that. But when it comes to governments, no one's used to governments moving as fast as Donald Trump has been moving, kind of shaking up the market. And me personally, I kind of love it. I like it like this. Keep people on their toes. It's not too crazy to the point where, you just think that the market's never going to rebound. I never got that feeling with what Donald Trump was doing. But yeah, that's just me. With the stock and bond markets blaring red alerts, Trump backed off of his tariffs on April 9th, triggering euphoria among investors after he announced a 90-day pause on the reciprocal tariffs for non-retaliating countries. The S&P saw its best daily performances in nearly 17 years with a 9.5% gain. At that same time, the sell-off in treasuries stabilized. Makes sense, Now, 32 days after the historic Rose Garden speech, stocks have executed a stunning comeback in sorts, with the broader market largely returning to where it was when the Liberation Day tariffs were first announced. Volatility in government borrowing costs too has leveled off. Makes sense. The gains are relative. Stocks remain about 6% below their pre-inauguration day levels. I don't understand. These people are really going by the week, by the day, by the month. The market is something. What's the saying? Time in the market is better than timing the market. These types of move really affect not the everyday person, but the person who is day trading. This is who they really affect, and it affects CEOs' bonuses and things like that. Now, it may affect your personal 401k. It may fluctuate it, but again, time in the market, it goes back up. Now, if you were planning on retiring that particular week where it dropped, then I can understand you being a bit upset about things. I can get behind. I understand that, but that's not everybody. That's some people. And if you just delay just a couple of days or a week or two, maybe even a month or two, guess what? The market returns just like it's doing right now. So I don't know what the hell hoopla about is. But some blue chip companies like Apple are still hobbling. It's $1 trillion company. How much hobbling are they doing? The iPhone maker's stock is down more than 20% since its all-time high last winter. There's other reasons for that, not just what Trump is doing. Yeah, I mean, I just read an article where the Apple Watch isn't really selling that well. So that company has something else going on there. Okay. Though partly for reasons beyond the president's policies, but they threw that in there for those who are reading it to consistently associate what Trump is doing with negativity. But you see how they threw that in there? It says, let's read that again. The iPhone maker's stock is down more than 20% since its all-time high last winter. This is, trying to point it towards what Trump is doing, right? And then right there after the comment says, though partly for reasons beyond the president's policies, like I just said. Tesla, which is helmed by Elon Musk, a close ally of Trump, is still 40% off its December peak. If anybody who owns Tesla stock, or have even been following the company at all and you don't own any stock, you know that stock is hella volatile. It's no stranger to big ass swings. Continuing. Nevertheless, the broader recovery has been significant. According to Dow Jones, the 8 trading days through Thursday last week saw the biggest gain for the S&P 500 since November 2020. Yep. When markets showed their first signs of recovery from the depths of the COVID-19 pandemic. It was a buying time down during 2020 for COVID-19, and it's a buying time now. With Friday's close, the index saw its longest winning streak in 20 years. Experts say the recovery has been fueled by a combination of Trump's softening tone on tariffs. It could be because he's, making deals, and investors entering an acceptance stage that whatever the president ends up saying, tariffs are here to stay in some form or another. I agree. Markets are adjusting to the tariffs story, saying, okay, this has happened. Now, what do we do about it? Said Roxanne Islam. I think I'm saying her name right. Head of research at Vetify, an asset management platform. Yeah, okay. I read that totally wrong. People are starting to look more forward than backward, which is what people should have been doing in the first place. Okay? This is the market. It goes up and down, up and down. You just have to make sure your position is good, as far as being liquid, so you can weather these types of storms. If flows of money into popular low-cost investment vehicle are any indication, the recovery has been led by so-called retail investors. In recent years, let's just keep it a buck. Retail investors like myself and some of your favorite YouTubers right now have gotten it largely right. I don't even really pay attention to the mainstream too much. I mean, I'm surprised I'm even reading this. This article is cool because it is informative. They do have resources, and they do have people looking at this stuff all the time. However, when it comes to stock picks or when it comes to get my information, I tend to listen to people that are individual investors who have a lot more to lose. These big companies, man, they're not always right. You understand what I'm saying? They're not always right. Anyway. Retail investors, opportunistic buyers who are more apt to make daily market trades. Retail investors, not so much. Yes, I would consider there is a segment of retail investors that are day traders, but a lot of the people that are online, they're holding, not buying and trading. There are traders. There are traders online who are, giving their advice and showing you what they are doing. Yes, that is true. But the vast majority, I know the people that I follow, they're all holding. So, yeah. Opportunistic investors, where am I at? That group stands in contrast to longer term investors like 401k holders or large institutions, which typically take a more measured long-term view of investing, which in my opinion is probably the best view to have when it comes to investing, the long-term view, more measured approach. But again, the day traders, they're out there. And again, it isn't all retail investors who are day traders. Continuing on. According to the Vanguard Investment Group, which runs investment vehicles known as exchange trade funds, ETFs, bulls, or net buyers of stocks outnumbered bears, net sellers, but by a ratio of nearly 4-1 among self-directed investors. The Vanguard ETF saw a 21 billion inflow last month, the most in its 15-year history and the fifth largest amount ever taken in by a fund on a monthly basis. But doesn't that sound grand? It would be simplistic to say it's just retail, but to a large extent, it has been, said Steve Susnick, what the chief strategist at Interactive Brokers Financial Group. That's a funny name. The retail investment boom surfaced during the pandemic when day traders turned to playing markets amid nationwide shutdowns. I remember that. That was wild to witness. The trend became best known for fueling mania in meme stocks like GameStop and Bed Bath & Beyond that would see intense run-ups in price amid online speculation about company turnarounds. The meme stock days have largely faded, I agree, but the impulse to buy the dip, the popular phrase used to describe when investors bet on stock prices rising after they've gone down, remains, Susnick said, and I would agree with him. I think the key element has been American investors' unrelenting faith that every dip is a buying opportunity, he said. And if enough have this faith, let's start again. And if enough have this faith, it can make itself true. Yes. It's a game. It's a game. Either you're emotional or you're not. It's a game. Okay, it's going to go down. It happens. It's happened for forever, and it's going to go back up. It fluctuates. You just have to know when you're going to be, if you're going to be at the bottom or you're going to be at the top when you're buying or selling. You just have to figure that out. The recovery remains extremely fragile. Stocks are highly sensitive to any hints of trade deals, especially with China, which was excluded from Trump's initial tariff pause. As recently as Friday, stocks surged on Wall Street Journal report that China was open to addressing Trump's concerns about its role in the fentanyl crisis as an entry point for both sides, softening their trade dispute. And the overall economic picture remains uncertain. Despite a strong jobs report, like I said in the beginning, this is really affecting those people who are day trading and who are heavily involved in stock markets and stuff like that, as if they are the only people that matter. As you can see, the people, regular folk who have regular jobs, if the company is still making money or generating a revenue, yeah, their stock price may be going down, but they're still moving products. Your job is safe. A strong jobs report on Friday makes sense. Offer indicators suggest the economy is throttling back. Economic growth was negative for the first 3 months of the year. Makes sense. Because of all that was going on, like I told people that it will take some time, and you're gonna have it. It's not gonna come back. It's not gonna start right back up as soon as he gets in office, or even so. Nobody can do that. Once you make a decision and things start happening, you gotta let things play out. You gotta let things play out. It's crazy. And while much of that was a function of a surge in imports as business sought to get ahead of tariffs, I saw that consumer spending, which accounts for more than 2/3 of the economy, fell to a 1.8% quarterly gain after surging a 4% gain in the fourth quarter last year. Friday's jobs report also showed the median duration of unemployment is surging and average hourly earnings growth is slowing. Yeah, I've seen that too. That's not always a good sign, but if you still have a job, great. Companies, too, are lowering their financial guidance for the year or withdrawing it as they await clarity on how Trump's tariffs shake out. As I said before, you got to let things play out and see what's going on. As a result, overall investment sentiment remains bearish. According to the American Association of Individual Stocks, AAII, whose regular survey most recently showed that expectation that stock prices will fall over the next 6 months increased 3.7 percentage points to 59.3%. Bearish sentiment is unusually high and is above its historical average of 31% for the 22nd time in 24 weeks. See, this is they measure in weeks. That's why, me personally, I'm just not worried about the fluctuations. Bearish sentiments has now been above 50% for 10 consecutive weeks, the longest period over 50 years in the survey's history. Even for people without direct exposure to the stock market, the negative sentiment can have an impact on the broader economy, said Mark Hamrick. I don't know about that. Maybe. Senior economic analyst at bankrake.com. I'm almost positive I didn't say that right. Those negative headlines do take a toll beyond those who have a particular stake in the market, he said. Maybe. There are also signs that the Sell America trade is lingering, according to Bob Elliott, CEO of the Unlimited Funds Investment Group, who noted in a post on X Friday that the value of the U.S. dollar remains well below where it was just before Trump's April 2nd tariff announcement, while gold and foreign stocks have been outperforming U.S. equities. I wonder if they're going to mention crypto, which at this point in recording the video is over 100,000. There's been a rotation away from the U.S. even with better than expected data, Elliott said. That's kind of expected. Trump is who he is and he was making, he's doing his thing. It makes sense. In short, it remains to be seen where the market goes from here. It's still early, said Islam Vedify. There's still a lot of that uncertainty, and I would agree. But I also would say that just hold your horses, pull up your shorts, and just relax. The market goes up and down. This is how it goes. If you're emotional, then good luck to you. If you're not, like myself, and you're just hanging out, you're looking at the market, you're buying the dip, or you're strategically investing in certain type of stocks like dividend paying stocks, or even crypto. I deal with crypto too. I'm not as much as regular traditional stocks. Crypto is still an area where I'm not as versed at. However, I do see its value, but only when it comes to Bitcoin and maybe Ethereum. All of those other coins, yeah, I think I'm staying away from all of that. The big institutions and governments are actually getting involved when it comes to Bitcoin, and that's where I'm going to be at. All the other ones I'm not really interested in at all. But anyway, I just wanted to read that article and kind of talk about that. Yeah, I think I'm going to leave it there. Until the next one, y'all be easy.